Welcome to the ARMR Report. This is the in-game update. Thank you all for joining. I'm not going to be doing the average, or I should say the weekend review that I do every Saturday at 11:30. I can't do it tomorrow, so I'm going to take my opportunity right now to share with all of you, kind of a weekend review as we get to the end of what has been, kind of a difficult week for me at the ARMR Report. So let's go over what we're looking at. We'll start with the indexes. We'll drill down into individual stocks. We'll talk about what's at the top of my whiteboard for addition and how I see myself changing my portfolio over the next couple of days. So as usual, this is a guide, the ARMR Report. It's how I run my own personal capital. It's the ARMR Investing Way. It's a three-stage process. We build the whiteboard. We use algorithms that are proprietary to execute, add risk, take risk off. We wrap it up with a bow of stop losses. So let's just dive right into some review of the indexes so we can see what we're dealing with. And kind of the major takeaway for me right now is that, the canary in the coal mine is always the small cap index. And I've been saying that to you guys for the last few weeks. Something's wrong with that canary, okay? And while it's not totally dead right now, it's definitely coughing. All right, let's take a look at what I'm talking about. Of course, I'm just sharing my information with you. You all have to make your own decisions when it comes to risk tolerance. I don't know your portfolio. You got to make your own choices there. Don't know what your goals are. So this is our our day trading screen of the indexes: the S&P, the NASDAQ 100, small cap, the Dow, and volatility VIX. Okay, all the purple lines are gamma information. So you can see today the gamma has been holding the S&P right at the lows there, that purple line right there, which is the put wall. And conversely, the put wall on the NASDAQ 100 has been the resistance. And so we have a market where there's no confluence right now. And that's kind of why we're not really putting any trades on. I don't have longs, I don't have shorts. I'm not doing anything at the moment on the day trading side of my portfolio. I like to trade when there's confluence. So what we've got here is the Russell 2000. IWM is the symbol. This has put in a double top over the last couple of months, and it broke down, and it can't get back above the 50-day moving average. This is the canary to me. I've been doing this over 30 years. When the stock market generally goes into a decline, it starts with weakness in small caps. Not always, right? And sometimes they all go down together. Like last year, had a pandemic, everything crashed. But if you start to build a top in the market, you'll get the big indexes continuing to levitate, but a hollowing out of the market goes on. I've been saying this for really, I guess, almost 3 weeks now. And the best way to see that hollowing out is to look at small cap index, right? It can't confirm what's going on in the S&P. Okay, so the S&P keeps going up, but the small caps have put a top in and they're breaking down. And that's generally my canary. When that starts to happen, it makes me concerned. All right, so I keep putting money to work because we have the big indexes rallying. I keep looking for pockets of strength. And the fact is, if you're a swing trader and you're trading aggressively, there's been a lot of opportunity. If you're kind of an intermediate term investor, longer term investor, trying to take positions and let them mature, it's been a washing machine of run up and implosion, run up and implosion. And so from my standpoint, like the last 6 months, 3 to 6 months really, all I've been doing is having some run ups, some pullbacks, kind of grinding it out. And, in my world, and you guys probably aren't hearing most of this the way I'd like for you to. So let me fix that mic real quick. See, I think there we go. There we go. That mic ought to be a little bit better for you. So in my world, the worst scenario for me is to keep my net worth intact during periods of time in the market where the market's searching for direction. During a time where big indexes are going like this, but underneath the indexes, there's massive destruction.
And so what I'm trying to do, unless with my index only portfolio, I own the indexes and the portfolio goes up a bit. But when I'm looking for opportunities, jumping on momentum has been deadly, right? So you got to buy things down deep in bases, then you can make some money on the run. I'll give you just an example, right? Here's a position in our portfolio that remains in the portfolio. Okay, so if we're buying Illumina down here, which we did, right, then we get a real nice uptrend. If you're trying to chase a stock that's breaking out, it's been kind of deadly. Okay, the market's not really paying for that unless you're trading fast. So I put all this together, and then there are some positions in the portfolio that really got whacked this week, right? So we have Pinterest in the portfolio. Now, for those of you who understand the ARMR Investing Way, and for ARMR insiders who are part of the live trading desk and on our Slack room all day, every day, we made it very clear that the ARMR Investing Way, going into an earnings announcement on an aggressive stock like that, is to cut the position down before the news. And the simple reason is our job is to get on the right side of probability when reward is worth risk. Going into earnings on growth stocks and innovative stocks, the reward to risk matrix is kind of flipped on its head. If they miss the number, the stocks get destroyed. If they beat the number, the stocks go up, but generally not as much as they go down. So the reward to risk is wrong, right? And so how do you manage that risk? You can't. The news comes out, it implodes. So you have to book some profits ahead of time, reduce the position size so it can't really hurt you, right? So going into yesterday, at the end of the day yesterday, we cut our positions in half on Pinterest before the news came out. And that way, whatever happened goes down a lot. That's disappointing, but it's a small position. Had it broken out to the upside, we could have doubled the position, had a core position on. That's how we trade here. That's how we manage our risk. Same thing's true with Amazon, right? We had an Amazon position in the portfolio. We shaved it down, booked some profits, right? Put the position on here. Stock ran up, booked some profits. Stock gaps down, we're exiting right around break even where we originally bought it. And we booked some profits up here. Not really the trade we want. And that's the washing machine I'm talking about. Seems like it's going to run, boom, comes right back down. So when I see that type of behavior in my portfolio, when I see the small cap index really underperforming, it leads me to a defensive posture. So what we did 2 weeks ago is we start adding, as you recall, you guys were on these calls last couple of weeks, we're adding some of the utility stocks. They're down a bit today, but there's a dividend play. So what we're doing is adding dividend plays and collecting yield while we try to figure out market direction and get more defensive. Okay. We added shares of Pfizer a couple weeks ago, right? Picking up the dividend yield, the stock broke out. Hey, we added shares of Gilead. Stock tried to break out, the earnings came out, stock sold off on earnings. We didn't change this position size. We're collecting that dividend. We expect the stock to stay within this range. And if we're lucky, the stock breaks out. We're dividend hunting right now. So the number one thing to take away from this conversation today is I'm kind of shifting my focus from growth and innovation towards dividend collection until the next time we see the market indexes come down and give us an opportunity. So we're carrying more cash. We're putting on defensive type of dividend positions, and we're waiting to see which way this is going to break, primarily because we don't have confluence in the indexes, and the canary in the coal mine of small caps is breaking down. That's the position we're in. And so the ARMR risk monitor remains at yellow. It can't go to red because you see that NASDAQ 100, S&P 500, they're in uptrends. So there's no way to go red there. But we're seeing weakness underneath those indexes, and it keeps us yellow. We can't get green. So we can't grab with two hands, and we have to be cautious. And that's where I am right now. So couple of names I might add to the portfolio. First of all, I'm not adding anything today. Okay, when I take a couple shots across the bow in my portfolio, Pinterest, Amazon, whatever the position may be, the first thing I do is I stop trading. I hold cash. We already have 30 to 40% cash in portfolios. Going to hold a little more cash. If I get stopped out of some positions, I hold some more cash. I look at every new position I put in the portfolio. If it's weak, I raise my stops, or I just take the positions out and say, wait a minute, something's not right here. Okay, I'll revisit next week. So the first thing to do if you hit a market where you're bleeding a little bit is to stop bleeding. Take a break. And this is very hard for investors to do because you generally feel when you see that happen to your portfolio, how do I make it up right now? Okay, you can't, right? And what happens is you go on tilt, as they say in the poker world, and you start giving it all away because you're trying to make it all back in a moment. You can't do that. That's deadly, right? The best thing to do is start building a wall around your net worth. Our job first is to protect the capital. Build a wall around it. And then slowly put the capital back to work when you get in an environment that suits you, okay, that fits you. When all of a sudden you start to see, yeah, these are working, these positions work, or you start building dividend positions on and go to more defensive. But you don't have to do that all in one day. Defend capital first, think about it over the weekend, put more capital out if you want. Now, if I'm looking for places to put capital to work in this market, what I don't want to do is chase momentum. Okay. I do not want to chase momentum. Momentum chasing has been deadly. If you want to make money in this market, you have to buy a chart like Illumina when it's down before it breaks out. So when it takes off, other people can bid up your position. You don't want to be in the position of bidding up someone else's position in this market. Did it work last year coming off of a massive market collapse? Yeah, it did. Okay. It doesn't work this year. Okay. So if you find yourself doing that, be careful. So, what I've added recently to the portfolio, and that's not a recent addition. No. What I added recently to the portfolio was Zoom. Okay. So the question is, what do I do with Zoom now? So first of all, you can see I'm buying weakness, right? I got strength. So I got higher low, but weakness over the last X amount of months. And I put a position on right there on Zoom. Okay. Do I hold the position over the weekend? I don't know. I kind of depends on how the market closes. I'm not exactly sure what I'm going to do here. I've cut the position down. Any position I recently added, I cut down. Okay. I love the story on TDOC, and we haven't owned it this entire collapse, but this looks like a major reversal here. We were on the conference call of earnings, and I think there's a real turn coming. Will I wait and use the low of this bar as the stop? I won't. That's just too much risk. So what I've done is I've cut the position in half, and I'll probably, use this low in here. Maybe what is that? Somewhere around 145 as the final exit on the rest of that position. Okay. So I'm not exiting these positions right away, but I'm just cutting them down. When I see destruction on something like a Pinterest or, some of these other names, it makes me look at the group and say, wait a minute, where do I need to protect? So we had a real nice run in Roku, and we took that money off the table this morning. Okay. I'm not going to hold Roku into earnings when they're beating stocks to death that missed the number. God forbid Roku missed the number. Stock will be done. Right. So the risk reward is just not right. And I'm going to book a profit there. All right. Twitter's been all over the map after earnings. Okay. And I just cut the position down. It's staying above the stop. It's acting great. I'm going to leave it in the portfolio, but I'm reducing my risk by lowering stops. Raising stops and lowering position size. Okay. Positions that I'm looking at that I may want to add are dividend payers. I'm looking to add Philip Morris, or Altria, I should say, the 7% yield. I think Dow Inc. looks interesting. I wonder what DuPont looks like. Not so interesting. I got to look at that yield. Maybe though. Maybe I wonder if there's a yield there, because this might be the perfect example of what I want to buy at the bottom of a pattern. So I'm not chasing momentum, but I'm buying the bottom of a pennant. And so if I'm buying the bottom of a pennant right at the 200-day moving average, and there's any reason to own it, that's the kind of entry point I'm looking for. I don't think, let me just see if, oh, it has a tiny yield of 1.6%. So that doesn't count as a dividend stock. Okay. I think Dow has a yield of over 4%. So that's a little more interesting to me. How about Chevron again? I don't know if I have an interest in the energy stocks. Company announced earnings. It was a pretty good number. Stocks down on the news, 5.5% yield. Okay. I know everyone tells me that AT&T, is going to stop paying its fat dividend. And okay, while they tell me that, I keep collecting the fat dividend, right? They've been telling me that all this time. And meanwhile, I'm collecting a 7% yield. Stock runs up, stock comes down. I get it. They have too much debt. They're going to cut the dividend. Well, I submit to you, when they cut the dividend, the stock bottoms and starts going up. So the principal will go up when they announce that dividend cut. That's generally what happens when everybody knows they're going to do it. And in the meantime, I keep collecting my yield, and maybe they don't do it. So, there's a thought for all of you right down there. Verizon, 4.5%. Okay, these aren't sexy names. These are just names to hide money and collect yield while I wait for my next opportunity. Okay, and I really think LUMN Tech is something that's got to be owned. Now, I got caught up in the whole meme thing, and meme stocks are getting wrecked, so it's coming on down here. But they're divesting of assets, they're paying down debt, and the stock pays a 7% yield. So these are the type of investments I'm looking for. I've been waiting to buy AbbVie. AbbVie announced earnings, the stock's selling off on the news. If it comes down to this uptrend line, I probably add AbbVie at a 4.5% yield. Okay? So I'm looking to add dividend payers to the portfolio. I'm looking to hold cash. Oh, don't forget, I'm looking to add precious metal stocks again. And I'm starting with these three. Franco-Nevada, which is far and away the leader. So I'm not buying it up here. I'm not chasing momentum. But if it comes down, I'm going to own it. Okay. Royal Gold and Wheaton Precious Metals. Those are the three names I'll buy. And I'm just waiting to buy weakness. They gapped up yesterday, and I wasn't going to buy the gap. So what I want to see is really the gap close, but have them hold at a higher level, and then I'll start putting these positions on. Okay. So those are my thoughts for today. Any questions you have for me, shout, and I'll be happy to take them. Otherwise, let's all get back to work. I'll give you a second to fill up the board if you've got any thoughts. Or are we all on the same page, ARMR Insiders? You guys are with me? I'll tell you what's really strange to me today as I look at options information on the S&P and the NASDAQ is this total bifurcation. I mean, the S&P has the positive option gamma has been building all day. And yet in the NASDAQ, complete destruction all day. So I'm really curious where this market's going to close, or maybe it's just going to close right where it is, somewhere around the VWAP, not go anywhere the rest of the day. That's probably what that's telling us. So I don't really have a big trade into the end of the day because I don't have confluence anywhere. I mean, if I had to guess, I'd be a buyer of the S&P here based on what I'm looking at. But I like to trade when I have confluence and when I have the greatest probability of success. And right now, the markets are going all different directions. Small caps are imploding and have been just horrific options data all day long, driving it lower. Same thing is happening with the NASDAQ now, but somehow the S&P option data levitates. I don't know what to make of that. So no trades for me. All right, what do you got for me? Any questions here? Okay, let's take a look at ELN. ELAN. ELAN marches to the beat of its own drum. This is not a growth. I mean, the answer is yes. There's nothing wrong with that. It's not hitting a stop. It's totally marching to the beat of its own drum, and I'm not moving that position. Tesla. All right, so let's take a look at the day trading chart. The daily chart looks great. Looks like it probably could be bought, right? But if you guys were part of the live trading desk this morning, I shared with you as Tesla was running right up into this area, which is around 700, that's where all the options overhead is. And so we expected it to stop right out at 700 and back off, which is exactly what it did. The issue here that I'm having with Tesla, Brian, is that, and this could change on Monday, so we'll have to see. Options data changes constantly, right? But for the longest time, 1,000 was the top open interest on the call side, and it dropped to 700 today. Okay, so the largest open interest was at 1,000. Now it's 700, and today's the day it dropped there, and that equals the largest gamma location, 700. So there's a lot of overhead there. Let's see what the data looks like on Monday, and maybe we'll get a better idea of direction and what we might want to do. Certainly from a daily standpoint, that chart looks pretty reasonable right there. I couldn't argue with you, and I think I'll be probably day trading it on Monday if it sets up correctly. All right, CCJ, BNN, the uranium stocks. Those just aren't patterns for me. Okay, those aren't patterns for me. And I did exit MDB. I'm not holding on to that stock. So exited that position actually at higher prices. And so Saber, if you want to know what I'm doing minute to minute, the best thing to do is to check the ARMR portfolio updates channel in the Slack room. And if you go in there, you could set up an email alert. So whenever I make a change, no matter what you're doing, boom, you get an alert that something's been added or subtracted from an ARMR portfolio. And so I subtracted MDB earlier today. Excuse me. Excuse me. All right. So you're asking me a good question. If I like to buy weakness, then why would I not be looking to buy cannabis stocks down here? And the answer is, and I'm glad you asked this question. I like to buy weakness in the midst of strength. Ready for this? With top day strength. Okay. Weakness in the midst of strength, top day strength. So what that really means is here's the strength, right? We have an uptrend in cannabis, US cannabis stocks. Here's the weakness that you're referring to, right? Absolutely. There's the weakness. But what I need now is strength in the short term. So I need a higher low. I need some type of triple bottom. Remember, we bought this right here and it popped up and we actually booked a profit on that tiny little move before it went to new lows. Now we have the index really going from an uptrend, which is trading above the 200-day moving average, right, to a downtrend now. So I don't even think the long-term trend is bullish anymore. This is a negative long-term trend in cannabis. It's negative now. And so what I need is a real double bottom to form, higher low to form, consolidation over a 3 to 6 month period, because this just doesn't look right at all to me. And so let's go look at Canadian cannabis. The same thing is true for Canadian cannabis. You know, here's a very basic understanding of technical analysis. If the stock price is trading above the 200-day moving average, it's in an uptrend. If it's trading below the 200-day moving average, it's in a downtrend, right? So I want overall strength in the trend, meaning we're above the 200-day. And then I want weakness, and that's what I look to buy. But if the asset breaks below the 200-day and the 200-day rolls over and starts going down, now we're in a downtrend. So now I'm going to need a whole new base to form before I have any interest in cannabis stocks. And you know, that's kind of the difference. I hope, excuse me, I hope that makes sense. Okay, can you please discuss the chart of Ford and Chewy? Okay, you have a gain in both, and you're trying to. Okay, let's take a look at Ford and Chewy. Whoops. Okay. Well, look, I share with you my rules and my process, and I'm certainly not able to tell you you should do this or that with your portfolio, right? So we got that disclaimer out of the way again. So what would I do if I owned Ford? Not what you should do, because I don't know your risk tolerance or what your goal is. But let's pretend I had Ford going into the earnings number and it popped on earnings. Like, to me, the very obvious stop on Ford, would be the low of this bar right here. Okay, so the low there is 1357. And if it were to close below the 50-day moving average, which is what it may do today, I might cut that position in half and then carry the other half to the stop of this low right here. So that's how I would handle Ford. You got to make your own decisions there on what you would do. And then Chewy. Chewy. Oh, Chewy. Again, if I was still long the stock, I would use the low of that day, which is the 27th, and that low is 82.55 is my stop. That would be a close back below not only the 200-day moving average, but below the reversal here, right? So it had a doji stone here and then a reversal hammer bottom there. So this should have been bullish and it's failing. So if it takes out the low of that bar, I'm going to have to step aside from that, from that investment if I was to be long Chewy. And again, based on kind of how this market closes and I don't like what I see. So I'm cutting down all positions that are like Chewy. So if it were me and I owned Chewy, I would cut Chewy in half and then I would carry the rest of it to the appropriate stop. And that way you can't be wrong that way. You've protected some capital. If it holds up and reverses and the whole market's okay and the small cap index breaks out to new highs next week, you can put the position back on and you'll make money. It'll be all right. But if the thing implodes, you're not going to kill your net worth. That's the key. All right, Boeing. I've put out an APB with ARMR Insiders. Let's find, names. Like, for instance, an ARMR Insider who's been all over the medical stocks in the last couple of months. I mean, he's been all over them, right? So, and well done. And well done. He knows who he is, right? All you know who he is. So XHE is breaking out, right? And I think it was 2 months ago that he started pounding the table, right, on this whole group. And they've been phenomenal. Some of these stocks are going through the roof, okay? So what I'm saying now is, look, I didn't put those trades on. I should have. I didn't. Guess what? The market will give me many opportunities to make that mistake again, right? So don't worry about me. That'll come around again. BSX. My question now is, what stocks are just now? I don't want to chase breakouts. So I'm not paying up for stocks that are running, but I want to find stocks that are setting up in these patterns right now. And this is kind of one reason why I'm willing to hold on to this trade right here. This looks like it's tight to a huge base that it's coming out of. I want to buy tight to bases. I don't want to buy them when they've already run. Okay. But this is why I'm kind of comfortable owning shares of Gilead, even though it's down today. I'm just buying tight to a base. Just look at where we're making money and let's try to constantly repeat that effort. Right? So having said that, you're looking at Boeing. Yeah, I mean, if Boeing is on your whiteboard, it's certainly setting up. Whoops. Miguel, I'm just never enamored with the pattern of Boeing. So I don't ever put the position on. But you're right. There's a stock that's tight to the moving average, tight to the base, right? It had a shakeout below the 200-day and reversed it back above it. Better than expected earnings numbers. Maybe that's a stock to take a look at. I won't argue with that. What else you got for me? McDonald's. Yeah, shook me out, reversed, and blew out. Yeah, that chart looks great. Right? There's a reverse head and shoulders, and it's about to go. But there's no way I'm paying up for McDonald's here. So, gold. Okay, so gold's down. What is that? 1% on the day. Gold stocks are still higher on the day. I'd like to add gold to the portfolio. Absolutely, Miguel. Gold prices have closed the gap. I'd like to see Royal Gold and Wheaton and Franco come down next week, early next week. And I think you could probably put that position on. You know, you're in a long-term uptrend. You've made a higher low. You've made a higher low in the last month, and you're holding that trend. That's probably a good position to put on. ART. Integra Life Sciences. That's a good looking pattern right there. Right? Yeah, I like that pattern. Disney's on the whiteboard. I just don't like the way Disney's acting. So I don't like the pattern of Disney. Something's wrong with that. So I'm not in Disney right now. And truth be told, I mean, when do they announce earnings? I'm not holding the stock into earnings right now. I certainly wouldn't buy right in front of it. Well, it's 13 days from now, so I guess you could do it. But there's something wrong with that pattern. I don't know. I don't like that. So I'm not in it right now. Let's look at Google. Brian, what am I going to do with Google? It looks, I mean, the stock's in the moon. So what's your exact question there on Google? I don't know what to say about that stock. I'm not going to buy it up here. You know? And after that Google story, I mean, honestly, I thought TTD was, oops. TTD looks like it should be bought, but I'm just, these stocks are dangerous right now. All right, you're asking me gold or silver or both? I think gold right now. Silver looks terrible to me. Okay, here's PSLV. There's no way to dress that up. That looks like a broken pennant formation. There's no way I'm buying silver. I don't know what's going on there. And when I look at the silver stocks, SILJ as an example, it just looks terrible. So if it sets up a whole new base, that's one thing, but that's something I would avoid, like the virus. That's what I would do. I'd put a face mask on when I look at that. Nordstrom's. That's not a pattern that intrigues me there, Miguel. I don't like the look of that at all. Home builders. Yeah, there's something to pay attention to. Right? Breakout, pullback, right to support, setting up all over again. I think Era has brought up Home Depot. I don't think I'd do that, but how about DH Horton? DH Horton seems to be a leader, Lennar. So let's just look at XHB for a minute. There's the home builders. So as an entire group, what you're doing is you're buying a consolidation at the 50-day moving average. Not exactly what I'm looking to do. Checkpoint. We could do some work on that. So we got a question here from the outside world. Thanks for that thought, Mark. And, you know, I'm really, I'm leaning towards putting a lot of, you know, myself on ice until I get a pullback in the indexes that gives me an opportunity again. You know, there's these vicious like shakeouts. They're really nothing to the big indexes, but it's deadly to your portfolio. Market drops for 5 days and stocks, you know, this is like a 3 to 5% decline in the S&P, and you're getting like, I don't know, 15 to 30% declines in stocks in the portfolio. So it's very hard for me to add positions to my portfolio with the market looking like this and small caps looking like this. That's just very hard for me to add to the portfolio. Where do I think the S&P is going to go? Monday? Oh man, brother, I haven't the slightest idea, you know, but the only way to get a jump on that, James, is to look at options data. Okay. And so on the S&P yesterday and the NASDAQ 100 yesterday, we, on the ARMR Pro live trading desk, we were talking about this. We saw an unbelievable, in fact, let's go over here. Let's go over to our, trading information, right? So let's go over here. Oops. So yesterday, right here, the S&P, as it was putting in these new highs during the day, we were getting massively negative options flows, huge negative options flows. So we put some shorts on, we bought some puts, it sold off, drifted off into the close, we made some money on those puts. But then it gapped down hard today, like massive puts were being bought. The same thing is true about the NASDAQ 100 yesterday, okay? So right now what we've got is momentum building on the long side for the S&P. So all day long, the S&P is challenging what's called the put wall, and yet the options flow data is very, very bullish. So theoretically, the market will be up Monday. Theoretically. You know, I mean, I'm not putting a trade on for that reason, and I generally don't guess direction overnight. I usually day trade, and when I'm done at the end of the day, I'm out in cash in my day trading portfolio. But you know, statistically speaking, the market tries to find support at the put wall, and we're seeing a lot of positive gamma coming into the S&P. So in theory, you're going to see the market go higher Monday. All right, let's take a look at what time is it? It's 3. We can go a couple more. EI Edison. Well, I don't exactly know what the stories are on Edison. You know, so is there a particular reason? Did they announce earnings that, you know, for some reason people don't like? I can't really answer the question on Edison particularly. Let me see what. Oh, wait a minute. They filed a mixed shelf offering. All right, so people are just getting out of the way of a secondary that's coming, and that's not really a reason to jump out of the stock. What else we got here? Edison. Trading higher in reaction. Okay, so yesterday they announced earnings. The stock was up a little bit. Now the stock's down as they tell everybody that they're filing for a shelf. So what that means is at some point in the future, they're going to raise more cash, and sometimes that's dilutive. And so what you get is weakness. We don't have to do this right now. What you get is weakness in the stock for a day or two. I'm not sure I would, you know, if I owned it, I wouldn't sell it just because they file a shelf. And as long as the utility index looks like that, you know, I'm not too concerned about Edison unless there's some other piece of news I've missed. All right, guys, this has been lots of fun. I hope you found it helpful. I'm going to be, I guess, the main takeaway from this conversation that I wish to share with you is that I am, for the time being, pulling in my horns a bit and getting a little bit more defensive, not nearly as bullish as I've been, until I start to see that I'm getting paid on some things. And so I'm going to do a lot of research this weekend. I'm going to be looking for more dividend plays because that's where I'm getting paid. Not a lot of volatility there, collecting some dividends, right? Or is there something key on my whiteboard that sets up at a major location? Then I might do something, right? A name I've been looking at for a long time, like, Magna, right? I love this story. They make the drivetrains for the EV vehicles along with all other kinds of stuff, right? So stock looked like it was getting away from me, but it really didn't. It hasn't gone anywhere since February. And it's right back down to the 200-day moving average. And it's setting up they made an acquisition, by the way, that crushed it down to the 200-day. So if this thing sets up at the 200-day, makes a higher low, oh, I can't wait to own that stock. So there's an idea. But I need time. And I need some patience in this market. And so I'm going to hold a bigger cash position for now. That's my thought for you. Have a great weekend, guys. I'll see you on the flip side. All right. Bye.